All right, it's time for your November housing bubble update. What's going on with it? Where are the foreclosures? What about the market trends? We'll talk about that over the next, 5 to 10 minutes. Pay attention, people. You'll figure something out about what's going to happen in the future. Not financial advice. Remember, I'm just a YouTuber. I can't tell you what to do or make a recommendation to you. But you can subscribe right here and like this video here and go ahead and leave a comment down below. Okay, let's get into it. So for our November update, we will talk about market trends, foreclosures building up, and where it's all going. Okay, here comes some data. We'll do a quick comparison of what we saw last month here with the Orlando, the Tampa, and we added the Indianapolis market. So we see that as of 1 month ago, we're plus 2% on inventory. Inventory's building. Prices are going down in Orlando, and median days on market are going up. Yes, slightly. So we have everything indicating that there's a slowdown finally in the housing market, at least in Orlando, and that's not really enough data to say there's a slowdown. Look at 1 year ago. 1 year ago, we are still 37% less inventory, plus 7% on price, which is crazy appreciation for 1 year. And then minus 23% for days on market. So pay attention to this right here. If you look at movoto.com trends versus what's going on 1 month ago, this just shows right here that there's a slowdown occurring. And we'll go over to Tampa. Tampa's much the same. We have more inventory. We have about 100 more houses on the market right here than we did 1 month ago. But you can see we're still way down over last year. Our appreciation is slowing down slightly. We're only 14% above last year, to where I think a month ago, 2 months ago, when we started looking at this, we were 15 or 16% above prior year prices. Tampa's slowing down a little bit more than Orlando, possibly. We have 9% on inventory, 4% negative on prices. And then we have days on Movoto's down, which, 44 days for days on Movoto. Well, it takes 30 to 40 days to actually close a house sale. So this is telling you that there's probably about 12 days that your average house is on the market right now. So things are still getting snapped up in Tampa, but there's still more inventory and everything than there was before. So that's 2 negatives and 1 positive for the Tampa market. And in Indianapolis, we're seeing a little bit of the same. It's kind of plus 2%, minus 2%, plus 2% bad, minus 2% bad. That means slow down. And then plus 5% bad on median days on market. So more days on market. I mean, who cares? 40 to 42. Again, it takes 30 days to close a house sale. So a house is sitting on the market here for 12 days on average before having an offer. That's a pretty hot housing market still. But you can see there are some signs of it slowing down, being that we're going into winter. And much the same trend still, minus 40% in inventory over last year, plus 18% on price in Indianapolis. That is great if you own a home there. Maybe sell it right now. Again, don't listen to what I say. I'm a YouTuber. But you would have made 18% on your house if you bought it last year. That's pretty good return on investment compared to what the stock market's done this year. And then median days on Movoto is still 20% under. So we're seeing it cool off a little bit. All right, good. That's our stats. Back to our slide. The next thing we'll talk about is what's happening in November now that there still haven't been any foreclosures all freaking year since March. So we'll go into some data on that. Hold on 1 second here while I find it. And here it is. We took a snip of some foreclosure activity. You can see you are usually having bank-owned homes right here. They would go ahead and be about $9,000 a month. We are 83% down on prior year. So what does that mean? Every month there should be so many coming on the market. There should be 9,000 on average coming on the market every month. Maybe it does a little bit of this, whatever. But right now, there's literally 2,000 coming on the market right here. So what are we going to do with that info? If we go from 9,000 to 2,000, that means 7,000 per month aren't being foreclosed on. That is building a bubble. Okay, so we have 1 month, 2 months, 3, 4, 5, 5 times 7,000 is 35,000 homes that should be bank owned right now and aren't. That is a problem. Okay, so what does that mean as far as a foreclosure bubble? Right now, there are going to be 35,000 some odd foreclosures that eventually hit the market that should have already been cleared. So you're going to have that plus normal foreclosures is going to be like 45 or 50,000 foreclosures coming up. Not to mention the auctions. We have auctions right here. See that? So there's usually like 20,000 per month. Yeah, so that's down here still. Again, kind of crazy. Let me clear this out. There we go, I got it cleared out. So we should have 20,000 of these per month, and we only have, again, like 4,000 or 5,000 per month. So 15,000 times 5 is 75,000 foreclosures. 75K. That will be our auctions that'll be coming on the market here sometime over the next year. That is going to be the whole bubble-looking thing like that, and it's going to burst, and, all these 75,000 are going to come on the market, and you're going to see everything do that when it does. So we cleared that again, but anyway, point is you can see that all of this activity right here that should have been all the way through the year is reduced to basically nothing right now down here. And all of this stuff, all the pre-foreclosures, the auctions, and the bank-owned properties eventually will all hit the market. So every month that this goes on, this is through September, November is much the same, December will be much the same as well until January 2021 when banks can finally foreclose again on everything unless the government extends their foreclosure moratoriums. So back to the slide. So as far as market trends go, everything seems to be cooling off a little bit. It's not really like getting frozen. It's just kind of peaking out right where it was, and there's people are realizing prices are really high. There still aren't any foreclosures to drive prices down, but they are building. We saw that. That will continue through November. Where is all of this going is the next question. We'll go back to one of our favorite slides, this one. So we talked about earlier in the year, March 2020, where there was a little dip and everything just skyrocketed after that to when we started looking at this August 2020. So prediction, I can't predict anything. I can only give you a likelihood. Sometime in the future, maybe January 2021, when people can finally foreclose. We just looked at all those foreclosures building. You'll have literally 7 to 10 months worth of foreclosures built up in the system that have to come out as soon as those moratoriums come off. That will have downward pressure on the housing market. Onto our next slide below this one, because there's going to be a million freaking foreclosures and auctions and everything else hitting the market in 2021. Now, it has been said that if there were double the homes on the market, there would literally be double the sales because everybody's looking. There is a shortage of inventory that we'll show you momentarily. But what happens when inventory comes on or foreclosures or people start selling their houses because of the foreclosure process we discussed here? I'll go ahead and link that one. I think it's our foreclosure crisis incoming video. And here we go. We'll go to the next set of data. This right here is a Zillow weekly market report. It's better than all the other charts that are 2 or 3 months behind that the government produces because they have to spend a lot of money on employees to crunch numbers that Zillow can really put out on a weekly basis. It's kind of stupid. They're paying a lot of people to do that. But hey, those government employees over at the Fed need to have a job too. So that way they can buy a house and all that stuff. So, okay, Zillow says that there is a well of housing inventory, meaning it is way down here. It is still dropping across the country. This was as of October 24th. We saw that Orlando and Tampa and Indianapolis all have increasing inventory month over month. So this is probably a little more up to date. I think this is daily data that Movoto has. A little more up to date than Zillow's week old. So, this might actually tick up a little bit in the next one as far as inventory goes. That would be good to see. That would mean you're possibly at a bottom for inventory. If we're at a bottom for inventory, what does that mean? It means inventory will either stay low and just kind of plod along this way, or it will creep up, which would be great. If it creeps up and eventually explodes through the roof all the way up to here, then you're going to have a decrease in housing prices and people freaking out trying to get out of their homes. That's two possibilities. It will stay low or it will begin to creep up and then hopefully explode when all the foreclosures hit the market. If that happens, you will have great opportunities to purchase houses. And if it just kind of creeps along, your opportunity to purchase houses is going to be much the same as it is right now, where you have to put a bid in or an offer right away when a house comes on the market if you intend to purchase one. So as far as the housing bubble today goes, if you see that inventory creep up like we had talked about, you'll start seeing the prices do this. And again, they peaked, definitely look like they peaked August, September, October, and will most likely begin trending down this month. Not crazily. We're just going to kind of hit the top of the hill of this roller coaster. And then again, if that inventory creeps up, you'll see this happen with the roller coaster. And if that inventory stays the same, you'll just see all of this extended out the same for the next year. And you never know, there probably will be more government stimulus that comes in. But what does this mean for you? What this means for you is if you're in the market to buy a home right now, it's going to be much the same as it was for the last 2 to 3 months with maybe some slightly declining prices. You might be able to actually put an inspection addendum on your purchase agreement. A lot of people were not doing that for whatever reason because they just wanted to get their purchase agreement accepted, which is dumb. It's dumb. Never buy a house without an inspection addendum unless you absolutely have to move because you're in a peaceful protest zone. Okay, so that's what it means for you. If you wait to buy a house, you will likely see some of this happening with prices in the future going into 2021. Don't know if it'll be January. I am not a fortune teller. It could be March, April, May, June, July, or September, October, whatever. That's what you want to keep an eye out for. We'll come out with another update here probably the next day or two on some other trends within the industry. Subscribe down here like we talked about to make sure you don't miss that. Like this video and leave us a comment on what else you'd like to see. All right, y'all take her easy out there.